Hello everyone. Whole weekend has been crazy, especially in US. So let's look at those first. Then after that, let's look at our regular pre-market report for today, 1st April 2025 for the Indian stock market in terms of Nifty and Bank Nifty. On last Friday, US government released the very important PC inflation for February month. Here, because now the fuel price had been dropped significantly for most part of the last 3 months, the overall PC inflation for February month didn't increase. It came as 2.5% year-over-year basis and increased 0.3% month-over-month basis, same as January month. But if we exclude the food and fuel, then the core PC inflation for February month yearly basis came as 2.8% and monthly basis it increased 0.4%. Both the metrics higher than the analyst estimation as well as above the January month. We know and we discussed multiple times, Fed uses the core PC inflation for interest rate decision. Now, because of this high PC inflation increase, last Friday night, US market crashed. Dow Jones and S&P 500 both were down around 1.7% and Nasdaq was the major dragger, it was down 2.7%. Basically, it was disastrous in US market on last Friday. Here, one important thing to note is that all the tariff on steel and aluminum, all those tariff and tariff related uncertainty happened only on March month. This inflation data, what we saw earlier, was for February month. So it looks like we got the crazy time ahead regarding the global momentum. Anyway, after that, during weekend on Sunday, Goldman Sachs, for the second time after Trump sworn in as president, increased the recession probability to 35% in 2025. Before Donald Trump as president, it was around 15%. Then somewhere near the end of February month, they increased it to 20%. From that, now at the March end, they increased it to 35%. So again last night, because of this recession fear, all 3 US market major index opened at least 1% lower. However, in the US time afternoon, White House press secretary gave the press conference that from April 2nd, the new tariff would be country-based rather than the sector-based kind of, which market took that as positive, and all 3 major index trimmed its losses and closed mixed. Dow Jones was up by 1%, S&P 500 increased 0.55%, whereas Nasdaq was again closed negative, down 0.14%. In case of VIX, couple of sessions ago, it was below 20, it increased to 20.3. Please note, US market closing mixed last night is not the indication for global momentum improvement. In March month alone, S&P 500 was down near 6%. So I personally think it's just a short covering before the March quarter end. Also, closer to April 2nd, which is tomorrow, we can say the uncertainty around the tariff will increase further. And on coming Friday, US government set to release the March month unemployment data. Again, it's another nerve-wracking macro, especially after all this Elon Musk Doge stunt. Hence, all these uncertainty increased the gold price to historical new high above $3,150 per ounce. So, altogether, it will be an interesting week. Then regarding Indian ADR, as it is last night all closed positive, but if we calculate the arbitrage because of Friday negative closing, still both the IT stocks indicating more negative bias. On the other hand, both banks showing positive bias. This might be conjunction with the rate cut expectation from RBI on next Wednesday. Reliance GDR wise, it closed more negative and showing over 1% negative arbitrage with dollar premium. Again, this could be due to the Trump ban on buying Venezuela's oil. But at present, there is an ongoing auction by Indian government for C block allocation for oil exploration. So maybe this might limit the negativity. Let's see. Then about GIFT Nifty, yesterday it dropped all the way down to 23,330 mark. But because of last night US market end recovery due to the Trump press secretary statement, it improved and early morning it traded at 23,518. So equating that with the Indian spot market, for now it's indicating the gap down opening of over 100 points. Here one more thing, I know global momentum is not good, but during on Saturday as well as on Sunday, there was lot of news circulating in the economic news websites that India and the US is closer on trade agreement kind of. And again, lot of analysts released the statement that if US had the recession means, then it will be good for India, since India is the domestic demand dependent economy, hence the impact will be only on some sectors rather than the broad based. all signaling that this Trump tariff threat expects to have minimum impact on our market as long as no oil price spike. Moving on, coming to derivative market participant-wise open interest analysis, after the monthly expiry which unwound around 22% on the future index, on last Friday hardly any new open interest was added. Index future open interest increased only 1%, so we can say not enough fresh build-up. But still, FII increased their short open interest position to 65% from 60% at the end of expiry. Other than that, all others, proprietary traders and retail traders maintained their open interest position. So that's the index future open interest status. However, in the index option market, open interest was built strongly. New call option added 36% and new put option added 26%. Hence, out of 50% unwound during the monthly expiry, fair amount of open interest was already built in the option market. Then, regarding the status, retail traders holding 2.6% net bullish position, proprietary traders holding 1.3% net bullish position, and FII holding 2% net bearish position. So, combining both option and future index market, retail traders inclined towards the market positivity. They make more money if market goes up, whereas proprietary traders was absolutely neutral stance. On the other hand, FII wants the market to go down. As a summary, though US market was closed mixed, but there is a serious uncertainty around the global momentum, and I have no concrete idea why Reliance GDR was this much negative. In addition, GIFT Nifty indicating the gap down of 100 points. However, by chance today, if the auto sales number and bike sales number for March month comes higher means, then that might improve the sentiment, as already we got the high rate cut probability. One more thing, there was a warning by Indian Meteorological Department that India is going to have a severe summer this year, which might cause some of the disturbance to the power sector. So possibly it might affect some power related stocks. Then as per stock open interest, ICICI Prudential Life Insurance, M&M Finance, IndusInd Bank, Hindustan Copper and Dauber are some of the stocks that got an increase in open interest along with a negative close indicates the short build-up. On the other hand, NHPC, ONGC, Nykaa, Delivery, BSE and HDFC Life Insurance are some of the stocks that got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, first at 12:30 AM, Europe's consumer inflation data is due. Then the aftermarket hours for US, ISM PMI data and number of available job openings at the end of February month are some of the items we need to keep an eye out today. One more thing, after 6 straight sessions of buying, last Friday again FII turned as net sellers. The net sold for near 4,400 crore rupees. On the other hand, DIA turned as mega net buyers. The net bought for near 7,700 crore rupees. Coming to technical, last Friday Nifty opened flat and was range bound in the range 23,650 to 23,450 throughout the session, then closed at around 23,500. Thus on the daily chart, Nifty formed a bearish candle with upper and lower shadow indicating some volatility. And we can see the last 2 candles resemble a tweezer top pattern, not a classical one, which is a bearish reversal pattern, though we need a confirmation today. However, on the positive side, Nifty still sustained above all key moving averages with RSI momentum indicator still above the 60 zone and MACD above the 0 line with a positive bias. Hence, going forward, 23,400 might act as the immediate support. A fall below 23,400 could take Nifty towards 23,200 where crucial support is placed. On the other hand, if Nifty does not fall below 23,400, it might rise towards 23,600 and higher. In case of Bank Nifty, it opened 30 points gap up and was range bound throughout the session similar to Nifty, then closed at around 15,500. Thus on the daily chart, Bank Nifty formed a doji-like candlestick pattern indicating indecisiveness among buyers and sellers. However, it traded well above all key moving averages and also near the upper end of the Bollinger Band with a positive bias and momentum indicators, which all showing some positiveness. As per the weekly options data, the maximum call option open interest was at 24,500 strike, followed by 24,000 and 23,600, with maximum new call option rating at 24,000 strike, and then 23,600 and 23,800. On the put side, the maximum open interest was at 23,500 strike, followed by 23,000 and 22,800 strike, with maximum new put option rating at 23,500 strike, and then 23,300 and 22,700. Thus, from options data, Nifty is likely to trade in the range of 23,000 to 24,000 in the short term. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.